This is Jay Martin.
All right, guys, welcome back. I'm joined once again by David Morgan. David, it's an absolute pleasure to have you back on the show. Thanks so much for making the time.
Well, Jay, thanks for having me. And let me just shout out to everybody that you're doing one fine job. As far as what you're doing on your newsletter, I've read almost all of them, and you really have a good grasp of the reality. So thank you for taking the time to write that and send it out.
I appreciate that. That's like honestly my favorite part of the week is drafting that letter. Means the world. I really appreciate that. I say things in the newsletter that I can't say on YouTube sometimes because we get demonetized these days. It happens fast with little or no warning. It's a tricky world we're in here, but anyhow, okay, first place I wanted to start today actually was remember the silver squeeze that occurred about 18 months ago, and there was this retail investor rush to buy physical silver with the intention of decoupling it from the paper market and proving the manipulation in the space. Do you think, David, that proved anything? Do you think it maybe proved that retail doesn't have the power to prove that through buying in the physical market? Do you think it shone a light on the manipulation in the sector? Like when you think about that event, does it strike you as an important and significant thing that occurred in the silver market?
Yes, it was an important and significant thing that occurred. And the retail got very close to exposing the way the market's based on derivatives rather than the physical metal. And the reason I could say that with assurance is Ronan Manley did probably the best job of anyone looking at what had happened during that time frame, which was mainly that both the SLV, I believe, and the SIVR, two of the top paper chases for silver. In other words, the SLV is a stock certificate. Yes, it's backed by physical silver, but we don't know how much has been rehypothecated or whatever. Basically, these two very strong ETFs changed their prospectus. And in one of them, to the best of my recollection, basically outlined that they were concerned that there might not be enough physical silver to maintain what was going on at that time. So it was one of those places that will be looked back upon, probably examined under a microscope and say, you know what? These Wall Street silver people actually pushed the two ETFs to not only change their prospectus, but actually admit, at least one of them, in writing, the reason they changed their prospectus was the physical market. So that kind of went away. It wasn't much longer after that. I think it's Rostin Benham, the CFTC acting head at the time, talked about tamping down the silver market. I mean, the commodities markets are supposed to be an open outcry, free exchange market determines the price. Of course, the open outcry's gone away, basically. I mean, it's all electronic now. We all know that. A lot of it's based on algorithms trading against each other. A lot of what's gone on in the market has been based on whose computer can beat whose, and the bank's computer seems superior to the trading funds. But regardless of all that, why would he come out and say they had to tamp it down? That is like kind of a clue. That's all it is. You know, there's nothing that we can do objectively and say, well, tamp down means you had to take it down $1, had to be within this time frame, or any of that stuff. All we can do is conclude that it was an indication that the CFTC itself is concerned about the price of silver, which of course raises several more questions.
Can I ask you, if you were to speculate 10 years into the future, 10 years, yeah, how will people look back on the work that you've done, the work on, GATA has done, Ed and Chris Powell and Bill Murphy, people like Peter Grandich, right, who have been shining a light on the manipulation in the sector. If you were to forecast 10 years down the road, how will people look at the work that you guys have done in terms of shining that light? How do you think that'll be perceived?
It's a tough question because obviously it's a crystal ball question, which I don't mind answering, and I will. I would say that it will be a select group of individuals that will see the reality of it. I wouldn't expect to see the majority wake up to it. I mean, the amount of people that are in the physical metals market is less than 1% of the population.
Right.
Although central bank wise, many central banks hold gold as an asset class, now a tier one asset. Silver's been removed from the banking system as a monetary asset. The banks that hold silver for financial machinations are bullion banks, but not any commercial bank, and they don't consider it to be money, only a commodity. I think there will be some people that will pick up. That's one of the reasons I wrote the Silver Manifesto with Chris Marchese, is to outline to the best of our ability the big picture on silver, meaning the history of it, and then the couple of chapters on fractional reserve lending in the bullion industry. We did a chapter on manipulation and using the Sharpe's formula. It is not a random walk. And Adrian Douglas of GATA basically is the one that brought that to my attention. In my opinion, Adrian was one of the stars of GATA way back when. He's long deceased, but he came from an oil industry background, a pretty good math guy. And then we started talking about the Sharpe's ratio. I applied it to silver. He was looking at oil and gold and silver. He was looking at everything. So there's that. I know it's too much of a hassle to go into what's the Sharpe ratio and all that stuff. You look it up on Google, you can buy the book or you can ignore it. It doesn't really matter to me. But the point is that, yes, there will be some people that will wake up and say, now there is a possibility, Jay, that as things crumble and we go into this reset and there's a currency collapse or the dollar fails like all fiat, there may be, some ones that pick up the torch and say, here's why. Look at what GATA said. Look at what Dimitri Speck said. Look at what, GATA and all of it. I mean, there's so many. I mean, half this bookshelf back here is based on like the manipulation of gold over the centuries. It's not been a free market for a very long time, although it has at certain times, but overall it hasn't. And anytime it seems to break away like it did in late 79, early 1980, then it needed to be tamped down. And of course, Volcker raised interest rates. A long answer, but a very important question, because the problem is if the light was shown on and it was pervasive and everybody learned about monetary manipulation, it's not just silver and gold, it's basically interest rates more than anything, and how energy plays into the petrodollar and why the dollar stays strong when there wasn't any backing. It's basically backed by force, government, and by oil. If all that came to light, then maybe we wouldn't continue to make the same mistake over and over again. So it'd be my wish that everybody got a monetary education somewhere in the system or outside the system, everyone learned it. But I doubt that will be the case.
Quick break, then we'll get back to the interview. In the description of this video is a link where you can subscribe to my weekly newsletter. It's free and I love writing it. This week, for example, what I wrote about was a traditional role in society that we've lost, known as the sacred clown. In historic Lakota culture, for example, and many others, there is a role known as the Hayoka, and the Hayoka's purpose was to make fun of everybody and everything all the time to prevent egos from running away or people taking themselves or their ideas too seriously. Now, we've lost that role in society today because those people get canceled, and that's a problem. So I write about things like this. I'd love to have you join the team. It's super fun. Link in the description. Now back to the interview. Enjoy. Now, do you think as the industrial demand continues to pick up and we're seeing the demand from, for example, solar panels as a standalone use case exponentially increase, right? And this is going to trickle through the battery storage sector. But as the industrial demand for silver continues to grow, will that take away from the historic monetary demand? Do you think that we're going to continue to move away? I mean, you mentioned silver is not used in the banking system anymore. It was, though, for a very long time and by some of the world's biggest economies. But do you think as the industrial use case continues to strengthen, that we'll move further and further away from silver as a monetary metal and strictly as an industrial one? Or what are your thoughts there?
Yes, I think that's the trend. So the trend has been that it's both monetary metal and an industrial metal. But over the last 40, 50 years I've been in this market, the tendency of more and more people is that it's just an industrial metal. Yeah. And I think that trend will continue. The ability to use it as money is certainly there, especially in a cryptocurrency space where you can back a crypto with silver and use it for, monetary purposes. So that's something to consider. But overall, I think the push is, but the more, so two things. Industrial demand at the present rate, and of course, it's a linear projection, more or less, would suggest that we'd be out of silver by 2030. And out of silver doesn't mean totally out. What it means is that there will be such a delta between the amount of silver produced through recycling and mining versus the industrial demand on total that they won't meet. Now, that's a projection, so we don't know that. So let's say that's not the case, but let's say it increases from 55% of the market over the next 8 years to 75% of the market. You still have silverware, which will probably still take place. You still have silver jewelry, which will probably still take place. So it's at the margin. It's the last bid at the auction that makes the market. And that's where stocks find their final price during the day, or a commodity or anything. So there doesn't have to be very much monetary demand for it to take off, because if there's more monetary demand than there is metal, then somebody's got to give it up for that higher price. And that's why it matters somewhat what the monetary demand is, but not as much as people think.
Interesting. Okay, now if you were to think about incoming demand drivers, right? What strikes you as significant? Would you anticipate maybe institutional investors will begin to pay more, or I guess sink their teeth into the industrial demand and start allocating cash that way? Do you think retail might lead the charge for the same reasons? Are there any incoming demand drivers that strike you as the most likely and most consequential?
Well, it's going to be a synergy like never beheld before, because industry, in most cases, it's price inelastic. In other words, you need so little silver to produce a refrigerator, or a flat screen TV, or a computer keyboard, but you can't make those items without silver. So they're price inelastic, meaning that silver could be 2,000 an ounce, and you still have to buy that silver, else you're out of the computer keyboard business, or you're out of the refrigerator business. So as the supply gets tighter and tighter, industry will be forced to buy it, not on a just-in-time inventory basis, but on a how much do we need for the next 6 months basis. And once the industrial side starts to take possession of it and warehouse it because they don't want to run out of business, that will accelerate through other industries. So example, Tesla, my open letter to Elon Musk, or some of these other people have done similar things, are screaming that, silver is vitally important, strategic, essential, irreplaceable, all these items, which are true, and you better wake up, because there isn't as much silver around as the price would indicate. The other thing on the demand side for investment is institutional, as you said, and retail. Those will combine. There will be some smaller, probably hedge funds, maybe some large ones, but smaller, and I'll digress for a second. But there will be institutional, there's already been very, very few, like a teacher's fund that's looked at the silver market and bought. And most of them buy through the ETFs, like the SLV, which is the largest, but there's still demand there. And you'll see more demand from some institutions, and of course, retail, once it takes off at a certain level, probably about 30, 33, you'll see more and more retail demand, because everybody will look at what the price fiat-wise is in their local currency. I mean, if you're looking at gold or silver in some of these other countries, it doesn't look so bad. But if you look at it in terms of the US dollar, it looks horrible. So it depends on how you're measuring. So there'll be a synergy of institutions, retail, and industry all at the same time, with a pie that's shrinking, especially with what's going on with the energy situation. So it might be where the smelting capacity has been decreased, as taking place. So you don't have as much refining. Labor prices go sky high because no one knows what a dollar is going to be worth tomorrow. So you'll have a larger disruption, I think, than you saw during the COVID situation throughout not only mining, but other sectors of the economy. But as Jay, you've heard me say 100 times, if you can't grow it, you've got to mine it. And I want to go digress just a moment. I haven't looked at the study yet, but I'm thirsty for information always. Gentleman has seemed pretty well grounded, talked about a study done by, I forget whom, that if you took all of the available resources out of Mother Earth, you could go EV for like half a generation. I have to find the study. I want to verify that. But I do know that if anyone wants to go EV all the way, if people are upset about mining now, they're going to be really upset going into the future because the
Yeah, yeah.
amount of earth that has to be dug up to get enough cobalt and lithium and some of these battery metals to keep this green energy. And I say that in quotes. I'm for green energy. It's just that this isn't it.
Hmm.
I've got another thing coming. So I wanted to get that into the interview, Joe.
Yeah, okay, I could dive in so deep on that one, the not in my backyard argument, right? We want all the benefits of the resources that exist beneath the core, but God forbid we should have to acknowledge how they're extracted. Similar debate going on in some US states, I noticed. I think it was Governor Abbott in Texas called out essentially, was it New York State, saying, New York's got a very, as a whole, right? I'm generalizing massively, so please don't skewer me, anybody watching this. But, you could say that the sentiment towards immigration policy is far more lenient in New York than it is in Texas. It's easy for New York to be immigration lenient because there's no border, right? Whereas Texas lives on the borderlands. And so Governor Abbott was saying, yeah, no worries. We'll relax a little bit as long as we can ship a lot of these newly landed Americans up to New York. Of course,
Yeah, right.
That didn't fly. So it kind of shines a light on the hypocrisy, which is not dissimilar to saying, like, I want the tech, but not in my backyard. Like I want the benefit, but please don't, Anyways, okay, so let me ask you a question. How do you balance this? You and I live in different countries, but I think we share a similar distrust and lack of confidence in our federal leadership, right? And I feel more uncertain and insecure in my country than I've ever felt before. I've always enjoyed sort of the bland, boring nature of Canadian politics. And I'm a little concerned that we've lost that. We're becoming very polarized and unpredictable. Now, I try to balance myself in that I want to have a plan B, like an opt-out plan, right? And for me, that looks like a few things. It looks like physical metal. It looks like a bit of storage, like, prepping to a degree, right? Within reason, I would like to say. Simultaneously, I'm an optimist and I'll bet all day long on human ingenuity, and I want to take part in my community, and continue to build. I've got a young family and I want to hope for the best and plan for the best, right? How do you balance that? How do you balance like betting all day long on human ingenuity and progress and being an optimist with your just in case plan without going too far off to one end or the other? Do you know what I mean?
I do. I think you summed it up beautifully. And, I don't really have a lot to add because you need to prepare for the worst and plan for the best. You want to be prepared in any case. Even let's say the economy is booming, there was a sound monetary system, full employment. We were just so abundant that it was crazy. Now you could even go to that scenario. It still doesn't mean earthquakes don't happen or floods or, hurricanes or that type of thing. So there's always that part of reality that you need to be prepared for, at least mentally, and hopefully, with the necessary items that you might need in such an event. But under the current conditions, obviously, we're moving more and more toward this uncertainty. And because of that, you have to rebalance. And it's all about balance, as you said. You want to be in a place where you have enough stuff that in the worst case scenario, you're going to be okay without dwelling on it. So that goes to the other side of remaining optimistic, looking at, the New America section of Investors Business Daily and seeing what kind of innovations are there in the future and where technology has helped us and where it's hurt us and why this is, the next trend or whatever. So, as I agree, there's a lot of ingenuity, and really what's not talked about much is the Great Depression. As bad as that was on the economy, there were a lot of innovators during it because the old adage of necessity is the mother of invention holds true. So people would realize, oh, there's a problem here, fix it. This is the fix. It works. It's proven in the marketplace, and they became rich, some of them. So there's that aspect as well. I think that, I've been in the sector for so long, it's always been kind of the fringe, doom and gloomers. I remember one of my early trips to Canada and one of your main brokers there, I won't name him, good guy, And he got kind of heated and, after the event and saying, oh, you guys have been saying that, since the 70s and on and on. And I didn't back down, but I didn't get confrontational. If you're an adult, you can discuss both sides. And I said, well, what's your perception of, the next Great Depression? His perception was much different than mine. Mine was that most of the wealth producers still exist. All the land, all the schools, all the highways, all the buses, all the ships are still there. So nothing physically in the economy really changes. All that stuff is there. It's just how is it owned? And the answer is, in most cases, in an over-leveraged system, those that are over-leveraged lose that asset. And the market reprices it to what the market wants it to be. And then there's a new ownership, and the new ownership basically takes over and kind of restarts. Now, that's past history. With what's going on in the future, Jay, I'm less certain because of the kind of nonsense that the World Economic Forum is touting with you'll own nothing, be happy, you'll never own even your clothes, you'll have to rent your cookware, you'll never own a car, you'll just use the utility of a car on a self-driving mechanism and all this stuff that they have as their plan. I don't buy into it, not only on a philosophical level, but on a practical level. Again, going back to the EVs, I mean, if they want all EVs, they want to basically destroy the planet. It's so hypocritical. They fly around in their private jets, tell us to watch our carbon footprint, say we should all drive EVs, not knowing that it can destroy the planet that they're trying to save. I mean, the whole thing is just mind-boggling.
Yes, it is. It is. And the top-down leadership approach from what is supposed to be a democratic process. Like, as an example, I was driving to work today. I got a push notification on my phone, and I haven't verified if this is true or not. So if it turns out that it's not, but it said, what is it? Canada is recognizing a national holiday in recognition. Canada announces a national holiday to mark Queen Elizabeth's death. That's what the news headline on my phone says. Now, I'm not saying that's like I'm for it or against it. Either one, I don't care. But where was the consultation process? Like, do we not have any say, right? Like, when was the discourse? Like, I missed it, right? We just learned about this today, and there was no discussion, right? And that's sort of been the story up here for about 18 months at least now, and you become apathetic towards it because it becomes normal, so you accept it as this is the way life is. But we do have the power to force change. I hope. I don't know. We'll see. But anyways. I had a new staff member join my team about 6 months ago, and I love it when this happens. She's been super loving her content, consuming what we produce. And yesterday she sent me a note on Slack and said, should I be buying silver? And I thought, oh, what a great question. And, my first question is why, right? Like, what's your intention here? Because that'll maybe determine what I would recommend you do. And so she's probably in her mid-20s, great, smart head on her shoulders, looking to start building some assets and some wealth for the future. And for someone like that, David, who would come to you and say, should I start buying silver? How would you begin to construct a portfolio? Say you're starting from zero. So you got ETFs, equities, physical, all that stuff. How would you begin to build the portfolio? She'll watch this, so she'll want to know. What would you recommend?
Well, the best way is to dollar cost average. I mean, I've been a proponent of that forever. You dollar cost average in a bull market and you'll do fine. So what happens when you dollar cost average is when the price is down, let's say you're putting in $100 a month or $200 a month, just any amount. So you put in $200 a month, and when silver's at 20, you're buying 10. But when silver's at 40, you're buying 5 units. And so when it's high, you're buying less, and when it's low, you're buying more. I mean, that makes common sense. But silver, particularly from my experience, a lot of people chase the market. There'll be more silver again bought above 30 than below 30. Although I could be wrong, and I hope I am. I don't know if I hope I am, because when everyone rushes in at 30 and all the way up, it's going to push the market higher and higher. But no, dollar cost average, I'd say at that age, I'd shoot for like maybe 5% of your savings or so, maybe 10. And once you have a solid base of silver, then relax. You don't have to buy anymore. Now, you could take a long-term view and say, I'm just going to buy it as a legacy investment, as we already talked about, Jay, if you're looking out to 2030, and for someone 20 years old, that's not, he's still going to be quite young. You might go ahead and continue with a 10-year plan, let's say, and that could be, and I think it will be, a legacy investment. In other words, silver is the most undervalued commodity on the planet. And where will it be 10 years from now? And the chances are it should be at least at equilibrium, if not overvalued. So that's something to consider. But a steady Eddie approach is probably the best. People love to try and buy the bottoms, go all in, they buy too much, they buy the wrong kind, they buy it from the wrong dealer, and then they're really upset with the silver market. And then they look at someone like me, or most of them, a lot of people look at someone like me and say, "Oh, it's my fault." I'm not the one that ever said buy the wrong, time it, buy it all, buy too much, and buy the wrong kind. If you look at my 10 rules of silver investing, I wrote that for the public to try to keep everybody into a mode of being happy about their silver investments. And if you look in that, dollar cost averaging is like rule number 3 or 4, I believe.
It's like the best approach to most things, I feel. And even to touch back on our conversation about, how to manage your desire, maybe to prep for that worst case scenario. The way I police myself is like I kind of dollar cost average into the rice game. Like I didn't go out and buy 30 pounds of rice, but every once in a while, like I'll, maybe once a week, I'll bring something home that goes into our, whatever, call your earthquake storage, whatever, your dry storage, right? And in that way, I don't get completely wrapped up in it, but I just have confidence that we're preparing for whatever it could be, right? Just power outage that lasts a month. Who knows what, right?
Well, look, I mean, I'm sorry if I interrupt, but
no,
let's say everything I'm wrong. We'll just muddle along. I gave a speech on this at the Silver Summit and talked about Harry Brown. And in the last days, I got to enjoy one-on-ones with him, and he talked about muddling along. Things can just keep going, even though the financial system is so distorted, it just muddles along. And so it muddles along 10 years from now or 5. The worst case scenario is you give it to the food bank. I mean, there's a very low risk when you buy extra food. There really is. And there's nothing out of the outcome other than good, the way I see it. You can eat it if you need to, and give it away to your neighbors if they need it. You can give it to the food bank if it really becomes unnecessary, or if that day comes, earthquake, storm, or shut down the grocery stores, or banking closure or collapse, or an EMP in some areas, or more likely, let me say this one, brownouts or blackouts. I believe those are coming in North America, Jay. So if you've got one of these bags of dried food, some of them are better than others in my view, and all you got to do is boil water and stir it for 10 minutes, and you got a pretty good meal. You'd be very happy you had that in a brownout or a blackout situation.
100%. And you're right. I agree with you. I think they're coming. And, I have guests on the show from all corners of the world. I had Ronnie Stoferle on, recently, and he's in Austria, and his government right now is recommending people start experimenting with cold showers, right? And, great health benefits there, but a funny thing to hear from your governance that this is something you might want to get used to, right? Or maybe help us out, take one for the team, right? And I get it. There's a lot of geopolitical uncertainty, and it's probably smart to recommend people start preparing for things they're not used to, because we've had it pretty good for a pretty long time. Now, I want to pivot back to maybe some specifics with the silver sector, because my audience is going to want to know what you're doing, what you're seeing, what you're thinking. Talk to me about sentiment at the Silver Summit. You were keynoting there. It's an industry event. So how did people feel, and what were they saying?
Well, what was very interesting is I think just before or just after, someone sent me an email about, is it going to be a repeat of last year's, meaning that silver hit the low for the year at the Silver Summit, Silver Symposium. And I think it did. And I didn't respond to that email, by the way. I just said, "Oh, I'll think about it." Sentiment was pretty low. I mean, everything was lined up in silver's favor here, and has been for a while. We've got backwardation. We have increasing lease rates. We have the commitment of traders showing much more favorable conditions than probably I've ever seen with the banks net long. So there's all these conditions. We also know on the physical side, entities are paying like $1 per ounce to transport silver. I mean, thinking about, a $20 silver bar at $1, that's like 5% right? 10% would be $1. Yeah. Oh no. Yeah, be 10% would be $2. So it's $1. So it's 5%. And that means that I want it that bad. I will pay that transportation cost. And these are commercial bars that are moving into Europe. And then again, talking about the smelter capacity that exists, but non-functioning because the electrical costs have gone up 6-7-fold in some European countries, and it's uneconomic. And the higher the inflation gets and the more it's perceived by the public, the more everything distorts because no one can price anything. You don't know what the cost is going to be to smelt silver or to smelt anything, or how much it's going to cost to start a lithium mine. What happens if you want to start a lithium mine and labor prices double, or the price of diesel goes, we're down here in this country at about $5.50 per gallon. What if it goes to $10.50 per gallon? How does that pencil out then for your lithium mine? So you put it on hold. So this stagflation is stagnate. You stagnate. You wait to see what the conditions are, hoping they'll improve. But as they continue to deteriorate at the end of the great currency collapse, which is what we're in, there's more uncertainty, not less. So maybe you decide you're not going to be a miner anymore because even you had that great property and it penciled out in 2022 in late October, but by the time you really start to dig in deeper, as a metaphor, and discover for this PEA it's going to cost you so much and labor's doubled, and it looks like that nation is good, not exporting what they used to. I mean, there's so many factors, Jay, as you well know. We're in a complex system, so there's so many points of failure or concern that could take place, and so it stagnates. People just sit there, and so you have less of everything, which is the physical economy, which means try to make up for less stuff per person, per capita, and we try to make up for it by making or printing more money. I mean, you can't print energy. Everything depends on the energy markets. And right now, we've gone from over 100 to I think it's 80 something. I don't follow it daily like I do the metals, but it's backed off. But it's again at the margin. You start to move up with more production in anything. I mean, agriculture, which we need. I mean, on and on. So I don't want to drone on too much, Jay, but the problem is uncertainty. And the reaction is, I'm going to sit and wait. And the more you wait, you're not doing anything. And the less you do, the more the government makes up for it by printing stuff that's I call funny money, trying to make up for it. At some point, the consciousness shifts. It's like, I don't trust this funny money anymore. I'm going to get something real for it. I'm going to buy food. I'm going to buy another car. I'm going to pay off my house. I'm going to buy silver. There's a lot of places you could go. I'm going to start a lumber yard because, I think lumber is going to be needed, and I can buy this for today. And I think 6 months from now, price of lumber will be up 30%. And I've got I'm staying even with inflation or whatever.
Are you concerned about the performance of the miners, David, with all the inflation risks that you just discussed? And does that impact how you're allocating capital, or have you adjusted your portfolio as a consequence?
I'm looking into it, Jay. I'm a pretty deep thinker. You've known me for years. I've met a guy at the Silver Symposium, and I want to get further into the water part of mining. Water's critical for mining. And we're having a great problem in the southwest of the United States. I mean, most of the easiest mining and best mining in this country is in Nevada. So I haven't explored that enough, but certainly it's on my radar right now. And I'm probably going to do an interview for my members with this guy, or an interview and a white paper, or maybe just a white paper. Kind of depends on him, how he wants to proceed. But I want to dig deep on what the impact will be. And depending on that study, on my own thinking about it, maybe bounce it off a couple, great minds, not that mine is, and then make a determination. And based on that study, certainly I would adjust if I needed to. You bet you, Jay. I mean, world changes and you've got to be on top of it. One thing about being a thought leader, and you can, shoot holes at me in the comments, I don't care. I've been ahead of the curve on a lot of things. Cellular phones is one of them, for example. I mean, we were early in the cellular phone market before anybody even thought about it. But we're coming back to today. I am concerned in many areas. Water's not the only one, but that's the most prevalent for a lot of positions that we hold. And by the way, everyone, the Morgan report looks at all the mineral assets, not just silver. That's my favorite. It's my specialty. But we've been in uranium. We have uranium picks we really like. We've done lithium in the past. Copper, I'm somewhat bullish on. Gold, of course. We were first in rare earth elements, even though James Dines claimed to be the original rare earth bug. We were there before Jim. So anyway, I just want to make people aware of that, because a lot of people think we're silver only, and we've never been silver only. But again, it's my passion.
Love that. Well, on that note, I want to point people to where they can find more of your work, David. Where should we send them?
I think the best place really is my Twitter, which is @silverguru22, because there's only 2 people besides myself that are allowed into that account. And the reason these 2 other people are is I trust them so highly. But a lot of that comes straight from me. And this is articles that I usually agree with. Some I disagree with, but I put them on my feed because I want to go back to them and say, you know, after this interview with Jay, this analyst put this out and he's out of his mind, you know, saying that there's more silver on Earth than we'll ever need, or whatever, you know, just making that up. But so sometimes just because I post it doesn't mean I'm in concert with it. But again, for my own edification, sometimes I will post these things because I want to go back and say, this is, you know, preposterous. Most of the time what I post, let's say 80% of the time, it's because it's something that hopefully objectively supports the argument that we're in trying times. You have to be more self-reliant, self-responsibility. Other than that, just go to the main website, themorganreport.com, get on our free email list. We've been shadow banned for years. But if anything happens when I'm taken off of YouTube, and I'm on other channels, I'm on Odyssey, and my webmasters put me on several. So they're there. But the best, safest is to be on our email list. Then we have direct contact, and I own the server that the site's on, the main site. And that means that no one really can dink with it. So you're safe and secure with us. And we do, I'd say we do advertise on the free list probably 3 or 4 times a year is all. Every now and then I might find something with a precious metals dealer that's pertinent to, you know, my list, and they want to rent it, and I'll let them do it. But it's not an advertising free newsletter. It's more substantive than that.
Yeah, no doubt. I love it. Thank you, David. I appreciate your time. You're a very valuable force in the industry. Just want to let you know that you've been super positive in my development in this sector, and in a handful of, like, you know, people that American Tusa, for example, you know, speaks of your influence on him very early in his career, incredibly positively and with a lot of gratitude. So thanks for all the work you do. I appreciate it.
Well, thank you for the accolades. I appreciate it.
All right, thank you for watching this interview. Now, 3 things before I let you go. Number 1, I publish a weekly newsletter and I love writing it. I share my biggest takeaways and action items from the conversations that I have on this channel. In addition, my thoughts on current events, economic events, political events, and you can subscribe for free. Just hit the pinned comment right beneath this video, or just go to jmartin.club and you can subscribe on the website. I'd love to have you join the team. Number 2, ad revenue from this channel is donated to an organization that is super close to my heart called Zero Ceiling. Now, Zero Ceiling's mission is to end youth homelessness, and the way they do this is by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing, career training, and just generally positive influences on their life. I love what they do. Check them out if you're interested. And number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcasts. Just search for The Jay Martin Show. All right, thanks again.